Josh Brown continues to bet on one big tech stock, and that's where we begin our show today because he is doubling down on Amazon. So you doubled your position here in Amazon. Tell us why.
Amazon right now is selling at 18 times enterprise value to EBITDA. The 3-year median is more like 22. The 5-year median is 25. The 10-year median is 30. This is the cheapest you have been able to buy Amazon stock in quite some time. In the meanwhile, this is a company that effectively is going to be leading during this AI revolution, not just on the AWS services side, but even with chips. They've got 2 chipsets. They've got Inferentia and Trainium. And as you might be able to guess, Inferentia is inference chips. Trainium is training chips. This company is full throttle into its most profitable businesses, and they've cut tons of expenses from some of the less profitable or the slower growing areas. They have absolutely righted the ship after the pandemic era splurge on employees and facilities, et cetera. And now they are delivering some of their fastest profit growth in years. Amazon should grow earnings per share somewhere between 25 and 30% next year. The stock is, I don't think, appropriately pricing in all of the levers that they continue to pull, including having just become the 3rd largest advertising platform in the world in just the last couple of years. So the stock's been an underperformer. It's been doing well, but it's underperformed the other tech giants. I think there's really no reason for that other than it not being discovered yet. I could see this being a leader in the second half of this year, and I just want to be bigger here.
Weiss, it is the worst, to Josh's point. It's the worst mega cap over the past month, and it's coming off its 3rd negative week. Right. You own the stock. I mean, it speaks to the broader question. Do you want to be adding to mega caps here or playing for other areas of the market? If you think we're going to have another leg higher, maybe you don't. You're as invested as you said, as you've been in a while, though you'd lighten up a little bit, but still.
Yeah, look, if I were to put money in it, it would go into the mega caps and some others, that aren't as popular in the market. We talked about like TransDigm or Leidos or other names like that, or GXO. But I think you have time. I don't think you have to rush in to buy Amazon or anything here. Now, Amazon has, and what Josh left out, what he's talked about before, is that it's a reform company because they don't spend on the dreams anymore. So they've really rationalized their CapEx. They've changed their models, going to smaller footprint warehouses now and shedding some more expensive, bigger warehouses. And cloud is still going to be a huge growth industry. Where I worry about it, though, is in terms of their e-commerce business and retail, because I'm just not that positive on the consumer. Now, you can make the argument that the consumer's going to trade down, and that's good for Amazon, and they're going to stop traveling to stores, and that experience spending, which I believe is starting to peter out and go more to spending on goods, and we see that durable goods orders have picked up in this market. So I think it's a really good holding. I'm not looking to sell any, but I'm just being patient in terms of buying, largely because of the market. It's a big enough position, so I'm not looking to add.